Look, you're probably watching this video because you want to learn how to make money in the stock market, right? But it's just as important to learn how to not lose money in the stock market and protect the money that either you're starting out with or some of the money that you've already gained. So today we came across a great example of that, and we're going to go over it right now. What's going on, guys? My name is Brad and welcome to the chaos that is the OTC. What I mean by that is over-the-counter stocks, and I trade these stocks because I love the volatility that's involved with them. It's so awesome to see something run 100, 200, or 1,000%, but it's just as scary to watch it drop 50 or 75% in the same day. So what we do here is we look for key clues that keep us away from losing out in this type of crazy volatile market. And so I came across this one today that on the surface looked fantastic. It looked like a great catalyst, and you know, at first my initial reaction was like, oh, this is getting me really excited. But I took a step back, looked at it a little bit deeper, and looked at the entire picture of this particular stock and realized that this was going to be a major mistake if I made any kind of trade on this particular stock. And I'm glad I didn't chase, and I'll show you why right now. Alright guys, so here is the example that we're going over this morning. We found this during my morning mentorship. If you're curious as to what that is, I encourage you to check the links down in the description below and join our group. It's called We Trade HQ, which is what you can see here. It's a free community of like-minded individuals that celebrate each other's success and help each other grow and learn as traders. So GOIG came out with some interesting news today, and we found it on my scanner, which is this right here. It's Equity Feed. If you're interested in using Equity Feed, I also have a link provided down below that'll save you 10% off of that. They don't owe me anything. I don't endorse them or anything like that, but it's just a great tool to use, and it can really help you with your trading career and finding some of these stocks that you know, could potentially run. So we went and looked at this within my morning mentorship at around 8:30 this morning. We saw GOIG and their merger news this morning. So this came out that their merger agreement with whoever this is, I think it's Cubet, I don't know, Holdings Inc., Nevada-based manufacturer of cannabis. So it's a weed-related merger. And while, yes, this typically can mean tons and tons and tons of positive upward momentum when it comes to a catalyst, a merger catalyst is probably one of the biggest catalysts that you will see, especially in the OTC. And so usually, when you see something like that, when news pops up like that, it's like, oh my gosh, this is probably something that we're just going to get right in and enjoy the wave. But when we looked at this a little bit more, I was telling some folks in my mentorship, you know, hey, let's take a step back here and see what is potentially going on. So I drew this line within the chart, and I was showing these folks what I was observing. And the first red flag for me was that I saw that there was nothing but continuous buying from about August 21st all the way to about, you know, closer to the end of October. So October, or I should say the middle of October, so about October 12th. And there's nothing but continuous accumulation and buying going on for almost 2 months. And why is that a red flag for me? Well, it's a red flag for me because there's a thing that's called, you know, front loading or just heavy accumulation. And when you look at something like that and you wonder why there's been so much buying and the price action hasn't really moved, the first question you should be asking is, well, what's the share structure look like? And in order to find that out, you'd have to go to otcmarkets.com. That is a great resource to do your due diligence on and find out whatever it is that you need to find out on a particular ticker that you might be interested in. So again, to answer the share structure question, I went to otcmarkets.com. There's security details. I looked at the float and I said, oh my goodness, look at this float. It's monstrous. It's huge. Over 3 billion in float, which means that these are the tradable shares that you and I can, you know, buy and sell. So 3 billion. Why does that matter? It matters because it would take an immense amount of buying power to really get this thing moving. And we saw that because all of that float was getting bought up during this time before the catalyst actually took off. Now, you know, right now it's reacting as if the float isn't anywhere near that, right? But that's because people are sitting on all of these shares. And once this catalyst came out, there's a theory that it's called selling the news. And it's not, you know, a surefire thing. Oftentimes, you know, news will induce or motivate buying. So I don't want to discourage anybody from buying something that, you know, may have a great catalyst. But the thing is that if I looked at this and I saw that merger catalyst come out and I didn't see so much buying going on here previously, then I probably would have been a little bit more attracted to it. But because there have been so much continuous buying, and it looks as though that potentially this 3 billion float or thereabouts, you know, we haven't seen this updated for a while, could have been completely bought up, and that's why it's moving the way that it's moving today. But the thing is that if you go back to my equity feed scanner and we can look at the orders that were made on today, and you know, it had highs of look at this, a 0022, and the thing is that when it got to 0022, the folks that bought down here at 002 or 0002 have now experienced 1,000% gains, and who wouldn't want to take those profits at that point? So that's what we saw happening. You know, you see tons and tons of selling going on, even though people are trying to buy into this because they say, "Oh, there's a merger. Maybe I should get into this." Well, that's what we call chasing, and oftentimes you kind of want to discourage yourself from chasing into something that you know, comes out with some great news or a great catalyst. And the reason for that being is because typically, historically, by the time the news comes out, it's already too late. You're always looking to try to get into something like this well before the news comes out so that you can be this guy down here at 0002 and you can get out at 002 or wherever you feel like selling. Now, this isn't me bashing on this stock or anything like that. This is just reading the chart, simply looking at doing some good old-fashioned due diligence and saying, you know what? While I wish I was somebody down here, I think it might be too late for me to get to something like this. I don't want to be buying high and selling low because that's not the name of the game down here, right? So I think this was a great example of, you know, learning not to buy something and just kind of observing to see how the price action played out. So there you have it, guys. Now, this isn't me bashing one particular stock. I hope that you don't get that type of vibe from me, but it's just so important to understand that perhaps sometimes when you go to buy into a stock after news has already come out on it, that more times than not, it's already too late to make some sort of entry on that. If you had gotten into that 000 range like a lot of folks did earlier on in those earlier months, then you probably would have been in really great shape now that news has come out today. But the thing is that if you're getting in at this point, it may be too late, and you would be doing what's considered chasing this stock. And we always try to tell people within our community that if you're chasing a stock, it usually always ends up badly for you, because there's those people that have been loading up in those earlier days that are looking to get out of this stock at this point because they've seen such exponential gains that they're ready to lock in their profits and really dump all of their shares onto you. So again, there was plenty of people that made money on this, and I always like to celebrate success. It's just something that you probably should be careful of when you know, making trades such as this and just reacting to major catalysts such as the one we saw today. The other thing that I didn't point out was that there wasn't any other filings on this company. The company's not current. And so that's another red flag. For me personally, I like to look at stocks that have all their filings together, they're current and reporting, even to the SEC, which would be even better. And so that was just another red flag that I didn't point out, but you can go ahead and check it out as well, and let me know what you think. I'd love to hear your thoughts. And we found this within our mentorship group this morning. If you're interested in checking out what my mentorship group does and what we are a part of, but check the links down in the description. We are WeTradeHQ.com. You're welcome to come in and join our free community and learn from people who've been trading for 20 minutes, people who've been trading for 20 plus years. So again, it's WeTradeHQ.com. I highly encourage you to check us out. It's free to join, and I hope that you do. It's a welcoming community where we celebrate success and help people learn from their mistakes as well. So with that, guys, I thank you for tuning in today. As always, I will see you all before the bell, and B Smith is out.